Good morning, everybody. Good morning, good afternoon, good day, good evening, wherever you are. And I know that you are all over the place, all over this little planet. And I'm here in the center of the universe in Europe. And let's go again through our weekly meeting. And structure is, as always, like I tell you first about few things that happened and which, in my opinion, influenced the market very, very strongly. The market, meaning the attention of people toward cryptocurrency and the use of cryptocurrency and all of this kind. I mean, it all relates to fundamental analysis that we will be talking about a bit later. Then I will touch on a very, very important subject. I think this is one of the most important subjects of all. We all trade cryptocurrency. We all make our lives better with cryptocurrency. But we do not everybody knows what it is exactly. Not everybody knows. Among the people, I teach courses in several institutions, and I talk to people, and they use the word cryptocurrency, but they don't know what it is. And I hope after today's meeting, you will not have any doubts, you will have no illusions what it is, and you will understand perfectly well. And then we will talk about trading, because after all, we're in a trading school. We'll talk about trading, and I will introduce and discuss 5 of the technical indicators that most people use. And I'm not going to say they are best. I mean, all of them are more or less the same. What is important is to know how to use them and use them consistently. So with that said, let's go ahead. Again, I'm Dr. Leon Rebelsky, and I'm glad to be with you. So let's start on the subject of today. And that is, of course, going to be, as I said, first of all, the developments. I have to start with something I'm a physicist with math background, and I cannot miss a news like this. I mean, it says the future of the world is changing as we speak. Okay, the world is changing totally. I mean, just last week, there was announced that there is a new quantum device, computational quantum device, that performed 2.6 billion years of computation in just 4 minutes. Okay. I don't know what they compared it to, whether they compared it to a mainframe computer or maybe notebook. It doesn't matter. It doesn't matter at all. I mean, this is absolutely revolutionary. I mean, the future is really here. And I will touch on this a little bit later, because this might have a big effect on the whole world of computation and maybe even on the world of mining, but mining cryptocurrency. But we will talk about it a little bit later. Okay. So what do we have now? I mean, this does not have direct relationship to trading. This is something that we all want to know, that we all have to know. Okay, let's have a look at what happened with Bitcoin over the last week. This is 4-hour chart. On MT4, many of you recognize what it is exactly. You see that over the period of last several days, prior to Tuesday, I think it was, it settled in a flat corridor, and we were all waiting which way it's going to go. It's still not clear, because you see, at some point after a period of this is like a couple of days period, not a very long one, of being almost flat. It went down, but again, it sort of hit the Bollinger, lower band of Bollinger Bands, and we will be talking about it today. And seems like this is going to be the line of support. We'll see what happens. And many people actually are concerned what's happening with Bitcoin, whether it's losing critical technical level, whether it's still there, whether it's still more or less alive, more alive than that. It's all connected to the overall situation in the market, both in the US and over the around the world. There was a 6-week, as you know, there was a 6 weeks rally in the market for the US stocks, and this rally at some point was changed a little bit. And that, of course, had influence. I mean, it's one of the strongest economies in the world, and of course, it has influence on every aspect of economy everywhere. So we are, many experts say that we are in the critical level, and it all depends whether it is going to break this 19.5 level and go back to the flat corridor, and then it might go back to the all-time high as we speak. Or if it breaks this level of support, it may go down, the price may go down 14, 15,000. I mean, again, this is not something that we don't expect. I mean, it's not going to change overall value of the asset. And we will talk about it a little bit later today. This is all matter of speculation because, again, we will talk about it. And other major assets behave in exactly the same way. This is Ethereum, and this is Litecoin. So basically, we are watching the situation in the market as it unfolds. We will see. I'm sure that until the end of the week, we will understand what's happening with Bitcoin. Okay, but still, I mean, people do believe in to the moon scenario. And here you have a couple of important influencers of the field. Mr. Willy Wu, he's an analyst, and he predicts, he's a very enthusiastic guy, I know him personally. He predicts 200, he says 200 is conservative. I mean, believe it or not, well, we'll see. And this gentleman, Dan Tapiera, he is taking a little bit more conservative approach to the analysis, to the prediction. He says one simple thing: if Bitcoin is going to repeat the same kind of rally as it happened this year, because he says only 9 months ago it was 4,000, now it's almost it went up to 20,000. So if it repeats the same, it's like 500% rally. Just imagine where it's going to be in 9 months. Well, again, let's see. I mean, we will not be surprised by any kind of developments, but we will not. I'm not taking any bets right now. These guys that I just mentioned, they are really cryptocurrency enthusiasts and influencers, and I mean, they live by cryptocurrency. But then there are traditional analytics. I mean, traditional investment houses, traditional scientists, if I may say so, who are not rooting for Bitcoin every moment they get, and but still, like Bloomberg, for example, Bloomberg analysts. I mean, they were always skeptical about cryptocurrency in general. But last week they released a report in which they say that next year, $50,000 per coin is not out of the question. And I believe these guys more than anybody else in the world. I mean, people who are not in the market day in and day out. And another guy, everybody calls him Mr. Wonderful because of the way he managed to turn time and money into more money. He is Mr. Kevin O'Leary. He also expects, he is also going to put 5% of his investment portfolio, which is Believe me, it is a rather substantial number. He's going to put in cryptocurrency, in Bitcoin, if it is regulated by Security and Exchange Commission. We'll talk about it a little bit later also. And this is also signifies great change of attitude, which is happening right now. Just last May, Mr. O'Leary said that Bitcoin is worthless and it is a useless currency. And the reason for that is that it's volatile, you cannot get in and out very quickly. You know, all these regular things that people are talking about. He's changed his mind totally. 5% of his investment portfolio is a huge number. Okay, on the government, we always discuss several governmental developments. On this level, we are talking about the rocket fast introduction of one of the first, but definitely one of the most important digital assets. China, after many years, several years, I mean, of preparation, finally introduced its digital yuan, the version of yuan. And it's already existing and going through tests in several parts of China. And the transactions already reached a rather substantial number, like $300 million. And if it is expanded, and they're going to expand it, believe me, they're going to be expand it worldwide, it's going to be a very, very significant crypto asset. So for those of you who are in the market for long-term investment, for those of you who prefer to get in and just wait, this may be a very, very good asset to view. And now it's already crossed the border. The transactions cross the border. Now the exchange, financial exchange of China and Hong Kong also using digital yuan. At the same time, by being so interested in using cryptocurrency, crypto assets, China also stated its position, which said that they do not believe in Bitcoin hype. It is just hype. Honestly, to me, it seems like the yuan, they hope, is going to be a great competitor of Bitcoin. And they are starting the campaign of sort of downsizing Bitcoin a little bit. At the same time, they say blockchain is everything. Blockchain is our future. Bitcoin is not good. I mean, how they explain it, I don't even want to get. I don't read Chinese. I don't want to get into it. So we'll see again. This is on governmental side. Now on business side. One of the major companies in the world, company which makes provides digital payments throughout the world, is going to use Ripple instead of their regular computer software. They're going to use Ripple and for the payment, for making payment, and that is a very, very big advancement. More like all the payments between Australia and Asia, which is, of course, as you can imagine, a rather substantial figure, is going to be done through with Ripple. That is a big advancement and big push for Ripple. And just to mention also that institutional investments reached a record size of 15 billion in cryptocurrency. So again, every time I say this, cryptocurrency is not going to go anywhere, and that is just the confirmation of that. On the governmental side, the governments still are thinking how to take a piece of pie to themselves out of this booming market. And the financial ministers of G7 got together, and they are very, very concerned about the development of cryptocurrency. And they say, they again stressed the necessity of cryptocurrency to be being regulated. well, nobody minds the regulation, but unless it's going in the proper direction, it does not take the most important part of the cryptocurrency out, and that is, of course, privacy. And that is something that very, very important statement, which actually shows the attitude of the government toward the cryptocurrency made by German finance minister, Mr. Olaf Scholz. It was referred, the whole, his statement was referred basically to the Libra relaunch. You know, the Libra is the Facebook cryptocurrency. The launch was halted. Now it's renamed Diem, and it's going to be introduced rather soon. But this is the statement that actually shows the attitude of all these governmental people, all these people in ministries, how they refer, how they see. They say, he said, we must do everything possible to make sure the currency monopoly remains in the hands of state. I mean, just think about it for a second. The whole idea of blockchain, I'm not referring to it right now directly, but the whole idea of blockchain, the whole idea of cryptocurrency is to take monopoly out of money transfer out of the government hands. And they're very, very concerned in their ministries and government, and I mean, they're very, very concerned that this is going to happen. I don't think they will be able to stop the development. And because even among these people, there are people who understand that you cannot stop the progress. You cannot stop. I mean, it's too late. It's too late. And Washington, U.S. government is going to introduce a new, very positive cryptocurrency regulation. They said that it's going to be by the end of Trump term. I mean, so which means very, very soon. This regulation is going to make investment very, very positive. And by the way, I forgot to mention one more thing about when I spoke about business. You know, this news just came in today. I just saw it maybe 20 minutes before this session, before this meeting. One of the major lending institutions in the US and maybe in the world, Fidelity Investment, is going to make their loans based to use crypto assets as collateral. So that means that companies and investment houses and private people will be able to monetize their cryptocurrency without selling them. So to use them as collateral, you can go to Fidelity for now and take a loan and have the fiat currency on your hands without losing the rights to your crypto assets. We spoke about Pakistani development. They're on the very, very active, and the provincial governments actually demanded from the central government to introduce as soon as possible the cryptocurrency regulation, and also regulation that provides a set of rules for crypto mining activities. Well, this is what's happening in the world. And I also mentioned Venezuela in previous meetings, and Venezuela is approved using their own currency, cryptocurrency, and the mining of cryptocurrency through the Venezuela army. Now they're exchanging funds with Iran and Turkey with Bitcoin. Well, all this adds to, and we will see it in a few minutes, all this adds to the very, very important fundamental intrinsic cost of cryptocurrency. And this is what I need, what I would like to talk about right now. So again, as I said, we use cryptocurrency a lot, we use the word cryptocurrency a lot. What is it? What is it indeed? First of all, several thoughts that people like myself and some of my colleagues have. First of all, they're not very very comforting, but still, I mean, this is what is happening. Cryptocurrency market is overheated and irrationally excited. Lots of people who are so enthusiastic that sometimes they cross the line, and lots of conflict interests, and a lot of hype, and a lot of confusion. And this is very, very important to say what I'm going to say right now. Very few people understand what's going on. People in media, people in finance, people in technology, people in academia or government. Very few people who are buying cryptocurrencies understand what's going on. Maybe I don't understand what's going on. But I hope that together you and me will be at least a step closer to understanding what's going on after this session. So I'll make a statement which will define the whole approach to cryptocurrency. It's a very technical statement, but bear with me, we will understand it in a few minutes. Cryptocurrencies are nothing but a new asset class that enables decentralized applications. So it's a new, I mean, the most important part from this statement right now for you is new asset class. Every asset in the world serves to a specific form of organization. Let's say corporate equities, the stocks serve their companies. Government bonds serve government, they serve countries and municipalities. Mortgages serve property owners. Crypto assets serve decentralized applications. Let this sentence sink in your mind, and we will go on. So just to say it again, cryptocurrency, new asset class that enable decentralized applications. Decentralized application, we spoke about it a little bit when we spoke about blockchain. I hope you remember this session, I do. So decentralized application is a way to create certain kind of service, any kind, financial, contractual, we'll talk about it, with no single service, that no single entity, no single party operates. But how did it all start? Remember November of 2008, it was like the darkest time of the financial crisis. I mean, the bottom of it, really, really abyss. And anonymous person publishes paper. And in this paper, first appears the word Bitcoin. Actually, the paper was called Bitcoin. It was described, the paper explained how to make electronic payments without the central party. It was the first decentralized application of that kind. It was a decentralized application for payment, specifically for payments. So how does it work? How is it possible to send an electronic payment without somebody confirming that you have the money and somebody confirming that the person to whom you send it received it? If you have like a dollar bill, $100 bill, whatever, $10,000 block of money, I mean, it's easy. You just hand it to somebody and that's it. But the data that you send over the internet, over the telephone lines, is not an instrument which actually going to serve as a bearer instrument. So we need an intermediary to validate the transaction. The solution for this is very simple. We create, and this was described in the paper that I'm talking about, the white paper of Satoshi Nakamoto. We create a peer-to-peer network, make it public. We announce the transaction to everyone who is a part of this community. And in this transaction, in this announcement, you specifically say how much money, whom you're going to send. And you sign it with cryptographic key, which is connected to to where you store your funds. Then there is a problem. Let's say you want to send same amount. Let's say you have only $100 on your account. You send it to me and you send it to somebody else at the same time. How we can ensure that you still have it? The question, of course, is very simple. The answer: to whom you send it first is supposed to get it. The second person is not going to get it because you don't have it anymore. How we can make sure that you cannot send the same funds twice, and that on the the first attempt counts? That solution is to appoint, to designate a party that will make a timestamp on the transaction. That again, we're going back to the same situation as we are with banks, with government, with whatever. It's not a good solution, okay? We need somebody who is an intermediary, but is not designated by anyone. And there was a breakthrough solution. I mean, we will let all participants of the network, all participants of the community, to compete for the right to make this stamp. Okay? Whoever, we will give them a competition in which they will, whoever wants the competition will be able to timestamp the transaction. Okay? We can't avoid the need for somebody to do this, but we can at least avoid the situation in which the same party was going to be timestamping the transaction every time. Okay? And that is important. But nobody will do anything without being rewarded in any way, in some way. Okay? I mean, we are living in a society that is moved by money, or at least by, if not by money directly, but at least by things that are connected to money. And what the reward is very simple. The reward is an incentive, an asset, the Bitcoin. Bitcoin is the reward of for the first person who made the competition, who solved the problem. Which problem? That's how the miners appear. Miners are the people or the companies or the government sometimes, as we have heard with Venezuela, who are going to compete for the right to timestamp the transaction. And we will make sure with the software, we'll make sure that everybody can join this contest at any time. And because we will make the open code for it and the network is open. So that's it. The problem is solved, like we say, like they say in the Olympic Games, on your mark, get set, go. They say go, we say count. So what is the contest? The miners have to find a random number generated by the network. This number is very, very difficult to find. It's so difficult to find that we can be sure that the miners are going to spend lots of megawatts of electricity for which they have to pay. And this is like direct search, brute, very, very forceful search for a golden ticket. In this case, a golden number. And here I want to come back to the situation with this new computer, which performs huge numbers of computation, huge volume of computation in mere seconds. Will it mean that the end of the miner situation? I don't know. Maybe it will. But as of now, this computer, the computing device, first of all, it exists only in there is just one, or maybe two or three throughout the world on different designs, but they are so expensive. They're so expensive that it is difficult to imagine that it will be financially feasible to use this for mining Bitcoins, mining cryptocurrency. It's like, this is my personal opinion. I mean, I haven't seen it anywhere yet, but probably this is the case. It's like mine cryptocurrency with quantum computers, with devices like this, probably is similar, is like delivering pizza in your Ferrari. I mean, if you have a Ferrari already, it's fine. But to buy a Ferrari, a fleet of Ferraris to deliver pizza is not a good idea. It's not a very feasible idea. So we will see. We'll see what happens. So why do we need such an elaborate and very, very difficult competition? We need it in order to make sure that miners incur real financial cost. Otherwise, it's not going to be a competition. The miners will follow the rules because they will be rewarded sooner or later. They will be rewarded with Bitcoins. And they follow these rules because it is because it's good for them. It's profitable for them. And how not to remember a very simple phrase of a gentleman named Adam Smith. You all know him, I've heard of him. It's not from the benevolence of the butcher, the brewer, or the baker that we expect our dinner, but from their regard to their own self-interest. This is very, very important. I mean, this is a philosophical issue. The world is moved not by the world is moved by the necessity, by the need of a person to do good for himself or herself. Okay, by doing so, they do good for everybody else around. And this is, by the way, I mean, it's not important. I mean, it's not so important right now, but this is the issue of the idea of Reaganomics. If you remember, there was a US President, Ronald Reagan, and he introduced this, and it's also philosophical idea. Okay. So the miner is supposed, let's talk about it in details. Miner is supposed to pay their debts, and it's mostly electricity bills. So they will sell some of the earned Bitcoins in the open market, and the rest is going to be their profit. So Bitcoin that they sell is now in circulation. People who need it can buy it. And people who just want to speculate it, like you and me, I guess, can also buy it and speculate on it. Very, very simple. So in general, to summarize this financial part of the crypto assets, in general, decentralized application allows anyone to do something that the one already can do today, but without a central party. This is very, very important. I'll give you two examples. One example is Filecoin. Filecoin is a decentralized application that enables users to store their files on a peer-to-peer network, not on Dropbox or Amazon or anybody or anything else, only on decentralized peer-to-peer network of computers. And the crypto asset that actually makes this possible is called Filecoin. And then so the use of the Filecoin entitles to share the excess hard drive space with the network. So people who have extra hard drive space on their computers provide it to others who need the space. And for that, they get Filecoin. Very simple. Another decentralized application, which everybody, of course, is aware of, and we talk about it every time we meet, is Ethereum. Ethereum is a different kind of blockchain from Bitcoin. It is actually like a do-it-yourself like construction box of construction set for making other applications. That's one of the ideas. And most of the ICOs that were very, very everywhere, that were everywhere a few years ago. Most of them were built on Ethereum blockchain. So people who mine Ether help other people to build their applications. And also, of course, the smart contracts, we talked about it last time. I'll just remind you, it's a blockchain application, decentralized, of course, that makes possible to make sure that the contract, the agreement between parties is fulfilled. It's done through blockchain by confirming that people, the miners, get Ether, which is a crypto asset of blockchain, which is a crypto asset. Okay. What are the problems? We still have the problems. All these decentralized applications are slower. Also, we talked about it. It takes a few seconds to send the signal through your bank that you can pay, that your credit card account has enough money to pay for your meal at the restaurant, but it's not going to work the same way with Bitcoin. They're more expensive. I mean, as of now. Well, anyway, they have a lot of negative sides to them, but people still use them. So who needs them? For whom Bitcoin is the best or maybe the only way to make a payment. Filecoin is the best and maybe the only way to store a file. And Ethereum is the best or only way to compute code. The answer is very simple. People who are in the countries where access to to traditional services is limited for any reason. It could be technological reason, or it could be a political reason, or whatever. But the internet, as we know, is everywhere. And also, people who don't want the rest of the world to see what they're doing and what they are transacting, storing. So all this speed, cost, scale is being weighted over by censorship resistance. I let it sink in your head, your mind. So let me summarize. So in the long run, the value of crypto assets, you see, maybe you noticed, I don't call them cryptocurrencies anymore. I call them crypto assets. And the value will go up or will go down, connected, the price will be connected to the usefulness of the decentralized application that it enables, it serves. So in the short run, that's in the long run, but in the short run, there will be a lot of volatility, extreme volatility. And this volatility is connected to this very, very recent time effect, which is called FOMO, fear of missing out. What does it mean? It means that people who are not in the market yet see the other people who are in the market for some time making fortunes, becoming really wealthy people. And that you start, the person who is not in the market yet starts feeling that he's missing on something. And that pushes him in the market. But then there is a totally opposite effect of, because of the volatility, you can see that sometimes the money that the funds that you invested became 10, 20, 30, 40% less than you did. And if you need this money to pay your rent or to buy food for your family, you have to sell your asset. And that these two feelings compete, and that moves the market in the short term period time slot. So again, cryptocurrency, this is really to summarize. is a new asset class that enables decentralized applications. I'm not going to say anymore because we spoke about it a lot. You can read it from your screen. This is what it is. I mean, cryptocurrencies are not exist without in the vacuum. They every one of them has its purpose, and the value depends on the purpose. The value of Bitcoin, the purpose of Bitcoin is to serve financial applications, financial transactions. The value of Ethereum is to serve smart contracts and building new applications. The value of Filecoin is to store the information, and so on and so on. Every one of them has it, and that is why these crypto assets exist and why they are worth anything. So I often ask the question. I mean, I teach classes in several institutions, and almost every time I start, I have the same question. So can we compare Bitcoin to a new modern time gold? And my answer really comes out of what we just talked about. No, it's not gold. It's better than gold. For one simple reason, because it serves blockchain, which enables people to transfer money from one side, money, information, whatever, from one to another without being centered. That is not going to go away. Unless we turn into some sort of dictatorship, which I hope is not going to happen. But in a free society, this is not going to happen, and these cryptocurrencies are not going to go away, and they're only going to increase in price in the long run. Okay, so now let's talk about technical indicators, but before we do that, I just want to remind you my personal, most important as I see, definition of how technical analysis differs from fundamental analysis. The answer is two words, just two words. Technical analysis tells you how the market price changes. Fundamental analysis tells you why it changes. That's the most important. That's the only difference between technical and fundamental analysis. Technical analysis says, I don't care why. I don't care what Janet Yellen or whoever else tells the world. I just want to see how to analyze the price movements and make the prognosis of how it's going to change based on this analysis. And how does it do it? It uses indicators. It uses indicators. What are indicators? They use formulas and charts to help traders to see the future possible changes in the market. So behavior of buyer, seller, and prices. They are not going to be they're not going to give you the future price. I mean, they cannot calculate it with great precision, but instead they give you the idea in which direction the price is going to change. So behind every indicator, there is a very, very serious mathematical quantum view of crypto market. And there are several initial inputs, parameters that they consider. The current price, the price of at any selected moment in the past, and the number and size of the deals. All indicators are based on analysis, on different quantum analysis of these three different numbers. Whether it's a prediction or not, no, it's not a prediction. As I said already, it's just a simple way of seeing which way the market is most likely to go. It's like very, very simple. There is a saying, I don't know whether I mentioned it here or not. No, I don't think I did. But it's in the words of Warren Buffett, it's in the financial markets. Sometimes it's easier to understand what's going on by looking in the back, in the rear view mirror, and in the rear view mirror, not ahead of the movement. So by saying this, what does it mean? It means that you need to analyze what happened. You fit it in certain formulas, and you decide the prognosis. No, there are a great number of indicators, a huge number of indicators. No one uses them all. I will show you the indicators that I personally use. I use only 3 indicators to make my trades. I will show them to you. It's impossible because they're mostly based on the same ideas. So it's not necessary to use all of them. So let's talk about them in more details. I will discuss today 5 technical indicators, top 5 technical indicators for cryptocurrency market. They're top because of the simplicity, seeming simplicity, because believe me, behind each of them, there is so much mathematics, so much computation, so many formulas that you can't imagine. But we don't need to understand how they work. I think I mentioned this analogy already. When you are driving, you don't need to understand what's going on inside of your car. You just know that you turn the wheel and the car turns. When you are sitting at your computer, you don't need to understand what happens when you hit the enter button or any other button. You just use it for whatever you need. You know, I have somebody, a friend of mine, a lady friend of mine, said, I don't care. I still don't understand how the electricity works. But it doesn't prevent me from using the electricity. Same here. You don't need to understand exactly how these indicators work, how these indicators are built. But you just need to know how to use them. So we'll talk about in future sessions, we'll talk about every one of them at great details. Now I'll just mention the ideas. The seemingly more complicated, most complicated among them is this Ishimoku cloud. Based on it helps you to determine whether support or resistance levels are still valid, and it gives you indication for the trend direction. Looks difficult. I mean, there are 5 different lines on the. I'm not even going to show you the picture. We're going to go through this in a special session, but there are 5 different lines, and they form clouds. And depending on where the market is, you make a prognosis whether it's going to be market up or market down. Seemingly simpler, but very, very powerful indicator is called relative strength index. What it does, it gives you an idea whether the market is overbought or oversold. It's an oscillator that changes its value from 0 to 100. And if it's above 50, the market supposedly is going to go up. The trend upward is more likely. If it's below 50, the trend down is going to be, the bearish trend is most likely is going to set. But actually, it's 50, here is the 50 line, 50% line, but most people use 30 and 70 values for making their decision. If it is above 70, it's overbought and most likely going to go up. If it's below 30, most likely is going to go down. see, you don't need to know, you don't need to understand how indeed this is calculated. You just have to look at the picture, and that gives you an idea which way to go in the market. This is how it looks for Bitcoin. This is 4-hour time frame. This is how this indicator looks for Bitcoin. And you can see that most of the time, and this is, it started on November 25th, so through 2 days ago, I think, or through yesterday, you see that market cannot decide where to go. It's all in the middle. It's all in the middle. So that, as I mentioned before, this is indication of market uncertainty. Now, moving average. At every moment, and this also I'm not going to stop to talk about in great details, because it's one of the most popular indicators, one of the most commonly used indicators, and we will need to devote a special session to it. But the idea is that it tracks the direction and strength of a trend, and it calculates it based on the value of data prior to that. So it makes like an average for every point. It makes an average of a certain number of market values from before. This is how it looks like. Again, we are looking at Bitcoin on 4 hours, the same, basically the same picture. And the red line, I don't know whether you can see it well or not, and the red line is the moving average. So the idea is if the market is above it, we make a bull decision. If the market is below it, we make opposite decision. So this is very, very, how should I say, this is very, very short way of telling what it is, but we will, again, as I said, we'll devote a special session to the moving average. Bollinger Bands, it's also one of the most commonly used indicators. Almost any chart that you can see that people analyze has Bollinger Band on it, and it consists of 3 lines. This is mostly, we're not going to get into details. This is sort of as a support line. This serves more or less as a resistance line. And this is a moving average based on 20 averaging over 20 previous points. You can see that in this case, about 95% of the market is of the changes of the prices within these Bollinger Bands. And when it is in a flat region, as for example from approximately here to here, it hits the bottom in the flat region, it goes up. And opposite, it hits the top, the resistance line, it goes down. So it's very, very useful indicator. We'll talk about it in our future meetings. And the trading volume. This is probably the most important, not the most, maybe the most important indicator of them all. It tells you how many people are in the market right now, how many people are buying, how many people are selling, and that gives you gives the market the momentum. Okay, the more people, it's like in physics. It is difficult to stop an object with great. It's more difficult to stop an object with greater mass moving with a certain velocity than an object with a smaller mass. Okay, it's a very, very simple, one of the Newton laws. Okay, and same here. The number of people who are in the market is like the mass, and it multiplied by the direction in which they're going gives you the momentum. The more people are buying at a certain moment, the less likely the trend to change, and the opposite. And this is how it looks on the charts. you can see that at the time when there was a big uncertainty in the market, the volume is significant. Same here, big uncertainty in the market, the volume is significant. So almost every decision that is made by people, by traders, is made having the idea of this indicator in mind. We will be talking about it in greater details about each one of these indicators. For now, I would like to wish you very, very successful trading, and hope to meet with you next week. Next week, I'll have a lot of more interesting information for you. Thank you very much for being with us, and good luck in your trading. Goodbye.